All right, let's stay with the story and unpack Kenya's debt burden this afternoon. Reginald Kadzutu is a financial economist. He joins us from London. Reginald, great to talk to you. Thanks very much for coming on to Newzroom Afrika. So when we talk about Kenya's debt burden and the fact that this bill, according to William Ruto, was necessary to pay off growing debt, how much are we talking here and who is Kenya indebted to?
Kenya's total debt stock is around 10.5 trillion Kenya shillings as of last month, and the majority of the debt is to China, commercial debt, that's euro bonds and other commercial lenders, multilateral lenders like the IMF, World Bank, and some bilateral lenders. For the president to state that he needs to raise revenue to pay debt is a bit ingenious for my own thinking, because the real risk of their debt is with the external debt, and you don't pay external debt using Kenya shilling revenue. So, and unless they are putting policies to grow export revenue, policies that will increase the country's ability to earn in hard currency, then increasing taxes on bread and things like that will not help with the debt situation whatsoever.
So what does Kenya do about its growing debt in a context where countries like Kenya end up only paying off interest? And of course, as the debt grows, they're forced to lend even more money. But as the debt grows, it's difficult to find lenders that are willing to step in.
I think the Kenyan government had an opportunity when they came in, or the Ruto government had an opportunity to, when they came in, to sit down and call creditors onto a table and say, we have this humongous debt that we have. In its current structure and form, we are not able to repay it. So let's have a discussion. How can we lengthen the tenure of this bond? How can we either reduce the interest payments on it so that we have enough fiscal room to implement policies that will help us generate income to be able to pay the debt? Because as it is now, like this year, they have to pay 1.8 trillion Kenya shillings on debt service and debt redemption versus an ordinary revenue of around 2.4, 2.5. So that's 70% of all revenue collected is going to pay debt. Operationally, they will not have any money. Development-wise, they won't have any money. So in a nutshell, without the help of IMF and World Bank, Kenya cannot pay its debt.
Sure. Generate income should be the answer, not increase taxes.
Yes, and not just generate income anyhow. You need to have fiscal policies that go to places that are going to create an environment for private sector to expand and to grow. To cater for your external debt, you need fiscal policy that targets the ability to either add value to our exports so that we earn more on our exports. The only plan they've had on earning hard currency is to export Kenyan labor and hope and pray that the person who is going to work as a nurse somewhere will actually send some remittances back home. But the trend has been people go out, settle, bring the rest of their family out there, so remittances will not grow as much as possible. It is said to think that a whole government's economic recovery plan, it depends on sending labor out of the country so that labor can send hard currency back home. It's just a sign of cluelessness, I guess.
A sad and not a long-term solution at all.
No, at the current state that they have, the best long-term solution will be, one, definitely cutting expenditure to a bare minimum. Some of the things that they have in the appropriations bill of renovating Deputy President's house to a tune of 600 million, renovating State House, buying cars, allocating money to the office of the First Lady, office of the Deputy First Lady, and some unconstitutional offices definitely have to be cut. But the state where they're in, the amount of money they have to pay to debt, even if they make all those cuts, that will be beneficial for the future. But the current problem they have is they need 1.8 trillion to pay debt this year and another 1-point-something trillion next year. The best solution they have is to call creditors and say, we are stuck, we can't pay. If we can't restructure this thing, then we will default.
Yeah. And I mean, the two big creditors, you'll rectify me, Reginald, the IMF and China. Can we talk for a moment about how China has moved into this space of lending billions of US dollars to governments in Africa and around the world? I mean, China's total loan portfolio even rivals now the IMF and the World Bank.
Because China's loans don't come with governance strings attached. They don't come with human rights strings attached. They won't ask you to pass bills to allow LGBT. They won't ask you to pass bills to allow this and that. They'll give you money. They want business for their companies. So China will give you money. They will build the road. They will bring all the equipment to build that road. So that money actually never ends up coming to Africa. The Chinese government will pay a Chinese company in China to do all the work. So for China, it's a way of getting a foothold, and most of their covenants and contracts have security, so it's not free money. So we won't touch your politics, but if you default, we will take this asset and that asset, like what they were going to do to Sri Lanka. And there is still some argument in Kenya on the standard gauge railway that they built, whether the port of Kenya was the security. And up to now, no one has revealed that contract. Even after people pushing for it to be revealed, the government has kept it a secret. So that's how China has been able to get into the African continent. IMF will come with strings attached, and one of their strings is what we are seeing now happening in Kenya: tax rises, which leads to social unrest and might end up leading to someone losing a presidency. So people now tend to go for the Chinese loans and hope that they will be able to repay them and not lose then national assets of strategic importance.
And I mean, long term, just geopolitically, Reginald, what are the consequences of this kind of easy way out? So I don't want to be beholden to the likes of the IMF and the World Bank. It is, in some respects, easier money, but perhaps not in the long term.
I think the best thing for African governments and African presidents to do, number one, is to actually genuinely have a desire to see their countries grow, genuinely have a desire to see people being moved out of poverty. Once they start having such kind of mindsets, their policies will change and their buying for borrowing money from outside. I know capital is a problem in Africa, but if you are to grow yourself, Michelle, you're not going to go break the bank so that you look like the Joneses. You try and live within your means as you gradually grow, as you gradually increase and improve the lives of your people. So when we have leaders who genuinely desire to see their countries grow, people move out of poverty, our mentality and ideology on one, how we finance development, how fast we want that development will change. We have this fetish in Africa that you become a president and your legacy is how many roads did you build, how many super highways did you build, how many projects did you open. But all of those projects then don't lead to actually, one, increasing income, increasing aggregate demand, because if you don't increase those two things, national saving will not increase. If national saving does not increase, future growth is as good as gone.
Yeah, absolutely. The issue of living within your means, and so many of us can connect with that, right, as individuals, never mind as a country. The protest action and so much of the unrest about this current bill in Kenya, it links back to previous legislation, right, where there were questions around whether the money actually went where it was intended or whether most of it went to the benefit of the executive.
There is a bit of that. So if you look at the housing levy that they fought tooth and nail last year to pass through, in the name of that they need to build affordable housing, which no one wanted anyway, because most people have their own houses either in their rural homes and all. If you look at most of the money that has been collected, according to statistics, they invested that money in government bonds, in government infrastructure bonds. So they tax you. The institution that is running the housing plan takes that money and goes to buy government bonds. So the money goes back to the government now as a loan. And whatever the government does with that money, we will not know, because it just falls now into the normal port. But what sparked the protest this time around is the changes in the VAT schedule, which targeted consumption, targeted a person at the bottom of the pyramid. So when you start targeting bread, edible oil,
Essentials.
diapers, pads, yes, then as a salaried person, I'm already taxed. Then my consumption is being taxed. So number one, I'm being double taxed. For the one who doesn't have an income, the little they have, they're trying to survive, you're also taxing because everyone has to buy bread. And that is when people realized these guys do not genuinely have our desires or our goodness at heart.
Yeah, your best interests at heart. So, Reginald,
exactly.
Where to from here? In a context where the president now says he will send the bill back to Parliament for consideration. I mean, so many people have been killed in these protests on Tuesday. Parliament was stormed. It shows just the level of anger and anguish at the thought of these kinds of changes to VAT. So what are the options available here for William Ruto?
I think he's playing a bit of politics and PR with this whole thing, because how do you send a bill back to Parliament when Parliament went on recess yesterday until 26th of July? Who is he sending it to? Unless the Speaker of Parliament recalls Parliament, which was taken over and all. So there is a bit of legal quagmire. Number one, a president cannot withdraw a bill; he can only refer it back to Parliament. He's referring it to a Parliament that approved the bill, so Parliament with 2/3 majority can say we are not going to delete the clauses you want us to delete. We are going to pass it anyway. So then he absolves himself and says, no, I refuse to sign. It's now Parliament that signs. So I think he's playing a bit of politics there. His legitimacy and his image has been severely damaged with the events that happened on Tuesday, the killing of lives of protesters that just had water bottles and phones, live bullets and all. So only 65 trips, 2 trips a year out of the country with photoshops with the who's who, all of a sudden have been wiped out by a 12-hour protest. I think he's in a situation where he needs to either calm down completely and say, guys, we are sorry.
Yes.
But he has not apologized. I'm not worried about that the MPs passed it or did not pass it. But the cabinet, his executive, which he chairs, came up with this proposal. So the brains that came up with this proposal don't have the best interests of the people at heart. So we can't even pass the blame to Parliament. Parliament is a weak link. They should have refused it on first go. But the guys who sat down and actually crafted it, obviously with pressure from multilateral institutions who want to see revenue increasing in the country. So their suggestion is you have to increase tax so that we can prove that you are able to repay their debt and we can be a guarantor for you to be able to go back to the Eurobond market and all to borrow from John so that you can pay Peter, and the vicious cycle continues and continues and we remain impoverished.
Yeah. And if he does indeed come down, as you say, it'll be quite a come down from calling protesters treasonous criminals just some days ago.
If he completely does come down, I think his chances for re-election in 2027 will be as good as gone, because this generation that are in the streets that are rioting, around 18 million of them, and 14 million of them will be eligible to vote.
Right.
Remember, you only won the last election by 5 million votes. You got 5 million. You only won by 100,000 versus the previous one. If this 40 million goes to the ballot and don't have memory of a goldfish and actually do remember what has happened, I don't think he will have a second term.
Reginald Kadzutu is a financial economist joining us from London. Reginald, thanks very much indeed for your time this afternoon.